President-elect Donald Trump campaigned on anti-Wall Street rhetoric. But for now, Wall Street appears to be pro-Trump. The Dow has touched a new record high, with industrial stocks shooting up on the promise of a Trump splurge on infrastructure spending and clawing back regulations for banks and drug companies. Donald Trump is vowing to unwind President Obama's legacy, but overnight he met with his political opponent for the first time. The White House says Trump and Obama did not resolve their differences, but agreed on the need for a smooth transition.
I very much look forward to dealing with the president in the future, including counsel. He explained some of the difficulties, some of the high-flying assets, and some of the really great things that have been achieved.
Obama has repeatedly called Trump unfit for the president's office, while the Republican candidate denounced Obama's tenure as a disaster. Well, to the local share market, which built on yesterday's big Trump-inspired jump. Miners and banks posted the biggest gains on the ASX 200 today. Across the region, mixed results after yesterday's stellar gains. And the Australian dollar is buying just over 76 US cents. And equities analyst for Bell Direct, Julia Lee, joins me now. Julia, welcome.
Thanks, Tiggy.
Now, a Trump victory. Can it last? These Australian shares pushing on up.
Well, that's a big question. And I guess at the moment, some of Trump's policy, or what we know of Trump's policies so far, have been good news for equities and bad news for bond prices. And that's why we're seeing such a diverse range of price reactions on the market. The best performing sectors on the market this week have been both the material stocks in the resource space, which is up a stunning 7%.
The miners, yeah.
Yeah, as well as the banks, which are up by 6%. But on the flip side, we have seen bond yields absolutely soaring. That means bond prices have come down. So
do you think the run is over on the bond side?
It looks like it for the moment, because those bond proxies, they've seen some big moves on the downside. Property and utilities down around about 5%. Telecom sector, which includes Telstra, down about 3.3% for the week. And those bond proxies like Sydney Airport down about 5%. And Transurban, the toll operator, down around about 8% for the week.
You mentioned the miners there. Does this mean our commodity prices can keep pushing up?
Well, there's a little bit of disagreement in the broking community at the moment on whether the running commodity prices can continue. Look, commodities have been the place to be in 2016, spurred along by the stimulus from China. And now they're hoping that the stimulus in the US, especially in terms of infrastructure spend, is going to compete with China for those commodities. So prices have run up extremely hard. And of course, the materials, BHP, Rio Tinto, South 32, Fortescue, all doing well on the market today.
Gold miners under pressure. Why is that?
Well, gold, the worst thing you could envisage for gold is a strong US economy and a strong US dollar. And Trump's policies at the moment are seen as stimulating the US economy. Talk of cutting corporate tax rate, personal tax rates, as well as fiscal spending. All this should help to stimulate the US economy. So gold prices have moved down as a consequence. And we've seen some big moves today. Just today, Resolute Mining down around about 10%, and the whole gold subsector down about 7%.
Now, let me ask you about one stock, Santos. Now, those shares have soared on the back of a Chinese buyer.
Look, Santos has been an underperformer in that oil and gas space. So nice to see.
It's had a terrible time.
It's had a horrible time because of its balance sheet, but nice to see a bit of support coming through. The stock was up about 7%. And Honey is a Chinese buyer, which bought a 2.25% stake, and it bought it at an 11% premium to yesterday's closing price. So it's always a good sign when a buyer comes in and they're willing to pay more for your shares. But Honey also sold off its 11.7% stake earlier on in the year to a Chinese oil and gas company. And what that means are the top two shareholders in Santos are both Chinese companies.
Might be a strategic play, you think?
Absolutely. So it could be a very good positive for Santos in selling to China, but also I suspect a takeover premium is going to start to creep into the share price.
Briefly, Trump didn't seem to be good for Apple or Facebook.
No, the tech shares and the tech companies have been quite vocal on being quite anti-Trump, but it's the prospect of rising interest rates in the US that has really pulled back a lot of those growth companies, because as you see rates rise, of course, growth becomes more expensive to finance.
Julia Lee, love your wrap at the end of the week. Thank you very much.
Thanks, Tiki.